Okay, are the hyperscalers like Meta, Microsoft, and Alphabet inflating earnings? Here to tell us more is the president and CEO of Wilsey Asset Management, Brent Wilsey. Brent, good morning.
Good morning.
My first question was, what is a hyperscaler?
Well, those are your big companies that do AI, they're doing the data centers, all that stuff. So they're the hyperscalers. And obviously we gave the name, so those are the big ones. But when I did this topic, I looked saying, this is very confusing, but I keep telling people things are very risky, and I want to give them real reasons why. And we're big on accounting, understand businesses and so forth. And Michael Burry, who you may remember, you saw the movie The Big Short and so forth, he's a gentleman that discovered the mortgage crisis, the real estate bubble. He said things are just too expensive. He wasn't guessing like some people do on Wall Street. He actually looks at numbers. And he's actually the one that came up with this, looking at the accounting for these big companies. They don't make sense. And I was debating to explain what shorting is, because that's what he's doing. He's shorting these big companies. And what shorting is that we'll take NVIDIA. NVIDIA is about $180 a share. I sell you $10,000 of NVIDIA. I don't own the shares yet. So what I do is I borrow those shares, and this is the way Wall Street makes a lot of money from shorting. I borrow the shares, then NVIDIA goes from 180 down to 120. Oh, well now it's worth, $6,000. I now step in and buy $6,000 in NVIDIA. I got the $10,000 from you before. Now I only pay $6,000 for $10,000. So these guys that do shorting, they spend a lot of time looking very deeply into the numbers, because it's not a guessing game, because they can lose big as well. So does that help with the shorting? Yeah, good, because it happens a lot on Wall Street and people don't understand it. So he's doing the same thing now with NVIDIA, Palantir, I think he's doing it with, saying, look at the accounting of what these people are doing. It's just too much. And what they're doing is that, we know they're spending, Meta, Microsoft, they're spending billions and billions of dollars on capital expenditures through servers and AI chips. Well, the problem is what they're doing is they don't understand that the chips, they're going to last maybe a year or two, and they understand this, but they're actually going out further than that, saying they're going to last 5 to 6 years. This is where the accounting comes into play, that they're causing themselves problems down the road.
So this guy you're talking about is diving into the forensics of what they're doing.
Very good point. Yeah, exactly what he's doing. He dives deep into this. He looks through all the numbers, financial statements, and I try to warn people, we're in a very speculative bubble. And again, this is not just if you buy Microsoft or Facebook yourself. This is in your 401k, your mutual funds, your ETFs, and the indexes, and the big part of it, and this is why I try to explain to people, this is very speculative, and it's going to come down eventually. I will tell you it's going to happen tomorrow. Actually, tomorrow, Monday, Michael Burry says he's coming out with some great news to really explain more about this. So people need to know that the risk they're taking is very high, and I just feel bad, like a year down the road, perhaps, like, oh gosh, my 401k is down 20%, what happened? Well, they didn't realize the mutual fund that they were investing in had so much money into these type hyperscalers.
Could there be political, legal ramifications for these hyperscalers? Is anything they're doing illegal?
It's not illegal.
Okay.
There's a thing called GAAP, Generally Accepted Accounting Principles, that they have to follow these guidelines. And as I said, they're taking these multi-billion-dollar chips and they're running them off over a 6-year period. Well, if they need to replace that, we'll say in a year, well, what they have to do then, they have to buy the new chips that are, advancing. And now that 6-year period they have the depreciation, they got to take all that in 1 year. So their earnings will drop dramatically because they had to take all those expenses they thought would take 5 to 6 years. They got to do it all at once. So it's not illegal. They won't get penalized for it, but it's going to be a big problem on their earnings, because their earnings will drop dramatically. And then, it's nice when you say, oh yeah, our earnings went up and so forth. Their earnings will fall dramatically. And actually, Michael Burry estimates that on these big hyperscalers, talking somewhere around $170 billion in advanced depreciation hitting against the earnings of these companies. And it's not going to happen tomorrow, but it's going to happen maybe 2027, 2028. And people are going to wonder what's going to happen with these. And we seem to see right now, perhaps things are falling apart. Bitcoin fell from 125 down to what? I think it went under 80,000. You've got, NVIDIA reported earnings went up, then it went down. Maybe things are starting to come back to reality.
Okay, so what does that mean for the average Joe?
The average Joe, look at your 401k, look at your mutual funds. How much of that portfolio do you see that Meta, Microsoft, Alphabet make up of your portfolio? And if it's 15, 20%, you may want to kind of do some adjustments, kind of get out of those. And if you hold those stocks personally, you probably want to come back on those, because they're coming, a big storm is coming. And I can't tell you when, but we're prepared for it. I'm trying to tell other people, look at what you have. Look in your 401k, look at the mutual funds, because you'll find a lot of these companies, they've done very well because they've ridden the train up. But the train is starting to slow down, and there could be problems.
Okay, Brent Wilsey, Wilsey Asset Management.
You understand accounting now?
It's the what?
You understand the accounting?
Yeah, I do.
Okay, good, good.
I know a lot more than I did when you walked in the door. That's
Good,
for sure.
good.
All right.